EO today?
I haven't, but look, I just pressed live, so we're live here, and it's the first trading day of November. It's election week. This is a week that everyone who participates in the market have been circling for a while, and there's lots of bets going into this week. For starters, just to recap last week was obviously an awful week. The Dow shaved off over 2,000 points, and it was just a terrible week. I saw some data that made me feel a little bit better this weekend, and that's that the short interest heading into this weekend hadn't been this high. The only time it's been this high was 2008. And that's like the amount of percentage of shorts that were out there. Apparently it was 18% across the entire market. And that doesn't mean that, 70 or 82% long, 18% short. It means like out of all the possible shorts out there, there was 18%, which apparently is like historically way above what it normally is. And Dad, maybe you could talk a little bit about this, but it even showed that the common speculator, not like hedge fund, but your average retail investor, over 50% of them were even short. And a couple people that I was listening to who put out like sort of a little talk show this weekend were kind of talking about how if you look back at historic events similar to the election, you could think of the 2016 election and you could think of Brexit. What he was saying, and it was this hedge fund manager, he was like, there's not an easier long than right now. He's like, just short term. He's like, I'm not saying long term, but short term, the chances of us not getting a massive pop. And he said this before today. He's like, it's one of the most shoo-in things when it's so jaded as far as how many people are short this market, how many people are bearish on this market. And that made me feel a little bit better. Obviously, the future started off pretty ugly again last night, but they quickly reversed themselves. And here we are. I think no one has a clue what's going to happen in these markets today. It's either going to be a complete flush out again, or maybe
it'll be up today a couple hundred points. And then tomorrow, my guess is it's kind of not much action. And then until we actually find out the results.
Yeah, when there's a big short interest like that, especially if it's retail short interest, that's even better because shorts mean that those are buyers in the market. And hedge fund shorts usually are longer term and can withstand being short a long time. But retail guys are like fidgety and they can't wait to cover. So those are buy orders waiting to happen.
And also, what was kind of being said was that you kind of hedge yourself leading up into an event, but as soon as the event happens, regardless of the outcome, you need to unwind the hedge. And then it's a race to unwind the hedge.
And that's where the hedge funds come in.
That's why I see 4 years ago happening all over again. Right after the election, we're going to see a massive pop, like huge. And no one's expecting it. Think about it for a second, though. 4 years ago, people were thinking a market tank was coming. Right after the election, the exact opposite.
I don't remember what the S&P was down right after they announced Trump won, but the Dow was down 700 before it turned around. So you can get a severe reaction. And then
I think you're going to see a lot of optimism when the polls, not the polls, because they're way off. When Trump wins, the market's just going to act so well later in the week, like crazy. Like you're going to see so many big money people being like, oh, wow, here we are at the roaring 20s beginning. And I think the narrative, you'll see it just shifting naturally after the election. The scare tactics around the virus are going to completely change. So we'll be seeing a much different narrative in the stock market.
Speaking of the virus, with Europe basically shutting down, which is real, that affects the economy here also.
Of course it's real.
Even if we don't, completely shut down, there's a ton of industries that are affected by Europe shutting down.
That won't be a long-term shutdown, I can guarantee you.
Did you see that guy on CNBC this morning? I don't know if it was before you guys – actually, it wasn't that long before we came on here, but the guy who wrote that book, The Black Swan, I think that was the name of the book.
I missed him. Well, what did he say?
he was saying that, when they were talking about what's the potential black swan, he was like, well, obviously a black swan is what people aren't expecting, so it's tough to say what the potential black swan is. But he's like, the one thing I will say is there's this ongoing narrative that this virus isn't serious. And he's like, no one knows if the virus is serious, but everyone seems to think like, this is a joke, this is a joke. And he's like, the black swan is the virus being something way more serious than what people are currently even giving it credit for.
Or the opposite, where all of a sudden
that would be
shift.
the black swan.
What he was saying, though, was he was like, the way you kind of have to look at these situations is if things are going to be bad, they're going to be way worse than you expect. And if things are going to be good, they're going to be way better than you expect. So the black swan is the extreme of what your imagination could really go.
Well, then humanity's over. That's just the end of humanity. But
he wasn't even saying that it's going to, like, you could tell he kind of thinks Trump's going to win. He wasn't flat out. Of course.
And that's the black swan is Trump victory.
He was saying the way you have to look at these elections is it's completely 50-50. He was like,
swan.
He was like, Brexit showed us that, 2016 showed us that. He's like, you just can't make
that's being very generous to Biden. The reality is the black swan is Trump sticking around, and this virus is serious. I mean, we both had it, but the death rates are, when you actually, if anyone's looking at the stats, this has been media manipulation. And I don't care who you're voting for. That's just the reality. So in my mind, the black swan is that in 3 days, we're going to see an immediate shift in narrative by the
I think I don't necessarily agree with that, because I think when you look at the death rates, it's too early to say. I mean, the death rates follow.
Too early to say.
Like apparently Europe is actually starting to see a huge spike now in hospitalizations too. I think it's too early to say that this is just going to go away after the election. I mean, that would be.
My curiosity is what's going to happen to the mainstream media later this week. Like, where is that heading? Because they've completely tainted themselves.
Let's talk about stocks for a second here, because everyone says that lows can't, you don't see lows on Friday. And I'm just starting to think that anytime everyone says something that's so obvious, it just doesn't happen. Like when you look at even the way the market kind of tanked in February, the way the narrative was, it should have tanked like 6 weeks before. And everyone thought that the market was going to tank right after the election, but instead it tanked right before the election. So it just seems like it's never as easy as it seems. And obviously heading into the weekend, it seems like you got to be short this market. And that's where
humans are clueless. No one ever has any idea what's going on.
I mean, Dad, what are you looking at today in the market? Are you kind of just sitting back and watching? Are you making any moves?
Oh, no. I was saying last week, I bought quite a few names, and I bought more on Friday. And, I'm just happy I have cash position to be able to do that. I'm never going into margin at my age anymore. And
when were you going into margin, Dad?
I rarely went in when I was your age. But, you just got to, in this kind of market, make your portfolio stronger. And you do that on the down days. And the day trading, you don't know where it'll take you as the day goes on. But for your portfolio, hopefully you strengthen it up on Thursday and Friday. And today is not the day to buy stocks when it's up 450 points.
Well, yeah, but do you think there's a chance here that we get a big reversal and the market ends up shitting the bed again?
Not happening. Not going to happen.
No, who knows what could come out in the next 5 hours as far as news goes. And that could happen.
I just feel like the mentality of a trader on a day like today is if the market was the opposite of what it is right now, they'd be thinking this is the time to finally buy. But the fact that it opens up 400, I'm wondering if people are thinking
I'm looking at a lot of names, and there's not, for an up 400 market, I'm not seeing tremendous strength in certain names. Like Apple's is up less than 50 cents. Microsoft is acting better. But Microsoft was one of the first stocks that had earnings in this, latest earnings group, and it's already gone through the mill. So that's acting better than some of the other ones. But, I'm kind of wondering where all the strength is. I see NIO is up 15%. That they're going back to these speculative electric cars. Their deliveries were better than expected, and they take the stock up 15%. If Microsoft said that, it'd be down 10%. It depends on what's going on in each area of the market. And it looks like they're going back to the speculative names again today for whatever reason.
Yeah, I mean, NEO, even the last couple of weeks, it's been holding up nice. That stock has been just out of
This is
control.
an all-time high today for NEO.
Yeah, it's crazy.
Disastrous market. Now, Twitter earnings only came out on Thursday night, so it's still going through the mill, and it's down today. And the market
should be down. They haven't been doing anything to monetize users.
And there's also the talk on a Twitter that, okay, the election is the peak of their earnings because of less chatter after that. So I'm sure that's part of it also. And the oils are getting, oil itself is down today. The oil stocks are acting better than oil now, which probably is indicating a bottom in the stocks. But, it's a horrible group to get involved in.
It was interesting, though, because oil and banks both turned positive on Friday when the market was.
And part of that is the thinking that Biden's going to win. We got to get out of some of these big capital gain stocks, or at least take profits in those to get ready. And what they have to do something with the money, so they're going in the scrapes, the basic bottom of the barrel stocks that haven't moved yet.
And then I think
those will sell off then on a Trump win.
Well, no, it won't sell off on the Trump win, but it won't be as dramatic anymore. You won't see the tech selling where there's huge profits.
No, I think we'll see a huge tech rally if Trump wins.
You probably will.
I mean, one of the issues currently with some of these tech names, like even, Fastly, for example, is it's fallen off so much. Like, how do you even pick up levels at this point? I mean, I
grabbed some Friday.
You did?
Yep.
Maybe
it's easier when those stocks are in a straight line up and they come back in a straight line to look back to see where the level was rather than pick the levels.
I like catching falling knives because if you catch it correctly, you get paid.
Yeah, but if you catch it wrong, you're buying it too high, and that happens way too often with some of these names. I mean, we've done that with Donkey Kong. This stock's been in a straight line down.
Yeah.
Very little strength today. Their earnings are out in about a little less than 2 weeks.
Well, when you have everyone locked down, how do you have gambling going on?
I mean, it's one of the stronger names in my portfolio today. It's up 42 cents.
What is up 42 cents?
DraftKings pre-market.
Yeah.
But, that could change on a dime.
Yeah, and part of the DraftKings problem, as we talked about, are all these people that want to get their profits in that are insiders, and that's also off of the Biden story in some degree. And another degree, this is where all these people have their money and they want to take something out. So there's so many different cross currents in this market. It's hard to just look at a stock and say this is an investable story because of the cross currents. Now, we've done that with Ford, and to a certain extent, if you play GE, that's gone on, and US Steel, and those names have a story to them now that you could wrap your arms around. But the tech stocks, it's hard to get excited about these stocks that have run 500, 600, 700% to make a new investment. That's why everybody's kind of, in limbo.
Yeah, Dad, you did a great job kind of getting early to the game on the whole Ford, US Steel, General Motor trade, because that's like all people talk about now. You hear guys on CNBC saying that, tech is going to kind of not find a bottom for a long, long time, and that these stocks like Ford are going to go on a bull run that they've never seen before. And obviously, I'm not saying that that's going to happen. I have no idea if it's going to happen, but everyone's kind of caught on to that narrative, and you were definitely super early.
No, that is definitely the narrative, and I think you could, we talked about the airlines a little bit, playing like, Spirit Air because they don't have business class. And,
yeah, I bought some Friday.
Those are the kind of names that at some point are going to move when that vaccine is announced, but they're moving anyway because they're so beat up, not because of earnings, but because of future future good news. You want to get in there before the future good news, right? I mean, CCL, some move. It's given it back, but that's a great day trading stock or swing trading stock.
The cruises are getting hit today because
which they should.
Yeah,
Europe shutting down. I mean, where are people cruising?
I don't know, but like the cruise looks more appealing by the day. Currently at 13.46. This thing at some point is probably going to be in the same ballpark as Spirit Airline. Is just the way you're looking at it, right?
Yeah, no, I agree. I like at long term. I think you could play these, but they're all over the place. For now, it's better day trading.
What would you say is the bullish thesis for stocks like Netflix kind of returning to their all-time highs, like the big tech stocks that are just kind of in no man's land?
Well, Netflix has to find that level of monthly that people are going to say, that is ridiculous. I'm not paying that anymore. And if there's enough other stuff out there, people will start doing that. I mean, I don't know if we've gotten there yet, but the only way they continue to do great is if they raise their prices and are able to expand big in India or wherever they're going next. But there's so much competition now. And at some point, people are going to get sticker shock from the price of all this shit.
I think it's getting close with Netflix because there's too many other options for content watching.
What's Netflix's price? Isn't it only like $12 a month?
No, it's up to like 17 unless you start cutting back on some of their services.
Yeah, and the problem is now with Apple, Hulu, Disney, Amazon, at some point you bundle them up. It's more expensive than cable.
Yeah, and I'm finding when I'm watching stuff, I'm still watching Netflix probably the most, but there's great content on these other names now.
I think Netflix has the worst content out of all of them.
Well, speaking of Netflix here, just to change the topic for one quick second, there's this awesome new chess show that came out.
I saw it, Queen Gambit.
Yeah.
Yeah, we want to see that.
Yeah, I've been loving that. I started watching it last night. I watched the first episode.
We saw a great movie on Netflix about an Australian jockey.
Yeah, I saw that yesterday. It was all right.
Good story. Any of the true stories are always
good. Yeah, I'm definitely underwater on a couple of these tech names. Like I own Netflix. I own Twilio, which I actually feel way better about than Netflix because I feel like Twilio just had such a fantastic quarter. And that company, when you think about just what they're all about and what the future is looking like, Twilio still has a shit ton of growth ahead of them. Like this is one of these companies that I think is going to be worth like hundreds of billions of dollars in the future. They power all the notification systems for this new on-demand economy. And when you think about how that's going to evolve, they're going to have notification alert systems that are just in a whole different realm that we're not even thinking of right now. I think
they'll begin with crypto. That's it.
They have explosive growth ahead of them, and they had an explosive quarter, and they're obviously off their highs, but they haven't quite been selling off as much as these other tech names. I feel like, I don't know, that's like one of the names I plan on, I think, sticking with for a while is Twilio. I know that they've got on quite the run, but I don't think it's over.
Yeah, now I see Duncan is way up today, Mike. I don't know.
I mean, yeah, because I sold them at their highs. They're not. I'm out of that stock.
Well, they're earning
downgrades this morning.
What's that?
Dad said their earnings came out. I said I saw they had a bunch of downgrades.
Yeah, but that was downgrade. This is typical downgrade. Credit Suisse comes out. They raised the target to 106.5 from 75. So it's a downgrade based on price.
I mean, they're going private, whatever. That whole thing.
Yeah. There's no upside. So if you have an outperform on it now, you got.
Yeah, I made my money on that last week on the news and got out of it.
So just to fill you guys in on like the people that I follow that are like always super bearish on the market, what they're thinking is that the market's going to rip to all-time highs, but then like full-on crash in 2021. So we'll see what happens. They've been very
nice to have a map.
What's up?
It's nice to have a map of what's going to happen.
They've been very good the last few months, especially this one guy that I talk about a lot, Sven Henrik. He comes on CNBC like super early in the morning because he lives in London. But he's one of these chartists, and to be honest, has been pretty dead on since the crash. It's been pretty fascinating to say. Like he, positioned long heading into the weekend, already covered some of that today, and thinks the market is about to just rip because we're in these like intense oversold conditions.
Well, especially with Trump winning tomorrow, it's really going to start ripping.
Yeah. Well, look, the narrative on the market is going to be first the election, then the stimulus, and then what? And I think it's the then what
Infrastructure
is scaring people because, well, the stimulus will involve an infrastructure deal. But what's after that? If Biden wins, you're going to have a tax increase, which can't be good for the economy. And everything else he's talking about doing, I don't think really affects much.
He doesn't even know what he's talking about doing. That guy is not.
But what affects people the most? The stimuluses and the tax decreases and increases. All the other stuff is nice pie in the sky talk, but it takes years and years, and the companies are already going towards green, whether Trump wins or Biden wins. They've already got their long-term outlooks and policies based on green energy. All the energy companies are going towards green in one way or another. Some are more advanced than others. So it's hard to see good news after the next stimulus. So I can understand where this guy's coming from, thinking we're going to have a big move up, thinking about the stimulus, and then what happens?
Well, if Biden wins, I agree with him. If Trump wins, I don't agree with him at all.
He also thinks that, like, this guy doesn't look, well, I'm sure he does aside from what he tells everyone else, but he's not like an individual stock guy. He just looks at the market as a whole, and he looks at it like the market hasn't actually really gone anywhere as far as growth in years. And that, when they get to the point where you can't cut interest rates anymore, it's like the market needs something all the time. And it's like that he thinks for years, where if you don't have that next, drug, call it, that you give the market to get it more jacked up, eventually you run out of things to give it. And he's like, everyone seems to think the Fed is just there to save the day. And
well, that's why crypto is the play. If you look at how Bitcoin's acting.
Well, I think Bitcoin is partially acting the way it is because people are thinking about post-election, all this rioting talk, and how far can it get?
That has nothing to do with it at all. You still don't understand what it is.
Well, I don't know.
But Mike, Dad's right in the sense that, again, when you look at the people who are like betting on a possible market crash in the immediate term, their thinking is the only way that this happens is if there's a contested election. And if after the election's a clear winner and there's complete chaos. And that way,
that's my whole point. Centralization. We need to have decentralized banking at scale for a world harmony is the reality. What you just highlighted is why I'm so bullish on Bitcoin. Because the reality is you can't just keep giving someone a drug to increase a market. You need to change gears.
And well, we've had many discussions about this, and it is if that actually happens, as I told you, to get to that world of harmony will be ugly and vicious. So you don't want that happening.
Oh, it's not going to be ugly and vicious. Everyone's always thinking the world's ending since history started. The reality is it's going to be a gradual ease in where people start being able to use Bitcoin for coffee and understanding it. Right now, most people don't understand what cryptocurrency is. It's like literally Play-Doh to them. So that once that shifts, you'll start seeing that narrative completely changing. Because we're already seeing startups investing in crypto around the world. So I have no doubt that's going to be the next push when what Dan just highlighted about the market needing a drug all the time. That just makes me love crypto even more.
Crypto is the drug. Quick touch here. The Dow looks like it's going to open 370 points. S&P up about 1%. And NASDAQ only up about 85 points. So it's going to be interesting. The other thing that we don't really talk about that much on here, but something that a lot of people pay a lot of attention to is the VIX, and the fact that historically it's a lot lower. And when you look at what the VIX really represents, it's volatility in the future. And the fact that it's stayed at the levels it's at kind of shows the level of uncertainty that there's been in the markets really ever since the pandemic comes. Because, Dad, maybe you could talk more about this, but historically you would think at some point, if the market's going to really actually rally convincingly, isn't the VIX going to have to drop back down to like those 18 levels?
Yeah, I mean, it'll eventually work its way down below 20. And historically, that's where it goes.
Post-election.
I mean, we've seen this thing go to extreme levels and many times, and it's always a good buy in the market when it does. Timing is hard, but a lot of people do play the VIX, no question. Where is it today?
It's down a little, but right now it's at 32.83.
Yeah, so it's not dramatically overdone, but it's getting there, right?
Yeah, and I think it got up into was it like the 60s in February?
Yeah, and it's been worse than that at different times. So it's hard to go by the VIX alone on when to buy, but usually if you buy the market when it's over 30, you're going to do pretty well when you look back on it.
And Dad, what's the dollar doing today?
Dollar is pretty much unchanged. Let's see right now. Yeah, it's almost completely unchanged today.
And then the DAX 200 points.
Big point, 170. Pretty tame numbers today across the board.
Maybe this will just be a way more mild week than people are anticipating, because everyone thinks it's going to be such an epic week as far as market volatility goes. Maybe that was more last week. And
only way that happens is a contested election. That'll be how we'll have a lot of shit show.
Well, Mike, Beyond Meat's up 3.25 this morning.
Yeah, didn't you tell me someone bought a big stake, Mike? BlackRock?
Oh, Beyond's up nice. Yeah, BlackRock increased their position over 15% at the end of last week.
They're up a little over 3% this morning.
Yeah, as they should be. They've fallen a bunch.
A little over $3, a little over 2%, not 3%. But,
that's yeah. If anyone's watching that you don't own Beyond, even Dad was saying how Ian, they won't order, like, how these young kids are with the generation of culture about not supporting certain brands with beliefs. Yeah. He won't eat Chick-fil-A with his friends and only Popeyes.
Yeah, but he will eat Popeyes.
No, but that's my whole point. That's why Beyond is
that
such
because of is that because of like the whole religious thing with Chick-fil-A? Yeah. Why is that? Gotcha.
Yeah. But either way, that just shows like the sentiment around younger people. That's why I'm saying on Beyond, because it's an agriculture play.
The cancel culture is in right now. There's no doubt about it. But yeah, I think Beyond's potentially one of those stocks. If things go well for them, they could have 5 to 10 time gain over
earnings in a week.
Well, I didn't mean in one earnings. Just it could be one of those long-term stories that you could see it really, really go way, way, way higher.
Oh, without a doubt.
It looks like Donkey Kong, the same chart.
It's nothing like Donkey Kong. It's a visionary, like next level world changer. Donkey Kong's a gambling app. Much different.
That has just been such an awful stock for me. It's just terrible. I mean, it probably, like, when you look at the chart, technically, if there's a real big flush out in the market again, that thing I could see getting to the high 20s. Like you can make the case for it. There's no doubt about it. At this point,
unfortunately, it's got the momentum to the downside, and that's what the problem is with these big falls. Like Beyond Meat also has momentum to the downside.
Yeah, I know. Great time to jump on it if you actually believe in the future.
Beyond Meat, though, at least is like definitely in a range. If you look at it, it was when I was in Colorado last time, which I don't know when that was. It wasn't that long ago. DraftKings, though, has fallen off a damn cliff. Beyond Meat has retraced kind of with the rest of the market. Those two, to me, have had completely, like, Beyond Meat, in my mind, is okay. Like, I think that stock, I think Mike's going to hit that put. I think that stock is going to rip higher. DraftKings, I'm not as confident about. I think they'll probably kill their earnings, but their valuation is just in outer space that it makes it kind of tough for them.
I'm more of a Penn fan long term than DraftKings.
Their valuation is way more in check.
Yeah. They have way more fluidity with what they're able to be doing. These partnerships with like NFL teams individually don't impress me. I don't really see that doing much.
And, this could be a good time to maybe pick up a little fiver.
Yeah.
That stock, again, had good earnings, sold off a little, and then got crushed with the rest of the market, but is still holding up well compared to, like there's stocks that are kind of holding their technical ranges, and then other ones that are just breaking down completely. And I put fiber in the former.
And how about Zillow? Their earnings are coming up. They've had a nice fall from their highs a few weeks ago.
Yeah, the stocks all have had big hits, but it's hard picking the bottom. So you're right.
All right. Well, subscribe, Rolland, Mark, and Mashup. Big week ahead here. We'll see you tomorrow.